So business travel deductions seem pretty straightforward, right? Until you throw in personal time and family members. That's when it gets complicated, and it's where the confusion, the mistakes, and ultimately the costly audits would actually happen. Because many entrepreneurs get caught up in creative hacks on how to hack the system and the taxes and all that stuff, like putting family on the board of directors, hoping to magically deduct their entire trip, things like that. But here's the truth. The IRS and the courts have very clear rules, and ignoring them could cost you thousands of dollars or worse. So stick with me, because I'm going to break down the basic rules here, share real life court cases that set the precedent, and reveal the little known secrets that can save you money while keeping your business and your family ultimately safe. So let's dive right in. First, the IRS says this: before you even book a trip, you must have a bona fide business purpose. That's it. No ifs, ands, or buts. So if you planned a Disneyland vacation and then you try to call it business after the fact, you're completely asking for trouble and opening yourself up for liability. Here's what that means practically. Your trip has to primarily be for business, not pleasure. Number two, you should have documentation, emails, meeting invites, appointments, all things that are substantial proof that literally prove that you planned your business activities ahead of time. And number three, travel days count as business days. And if you conduct legitimate business on Friday and Monday, the week in between can also count as business days as well. So this rule alone literally weeds out a lot of bogus deductions. If you can't prove your business intent before leaving, the IRS is going to completely disallow the deduction. So what can you actually deduct on a trip like this? It's not just the flight and the hotel, but here is the breakdown. Travel, like airfare, train, rental cars, even tolls and tips. Tolls and tips, yes, those can be deducted as well. Now, lodging, number two, hotels, Airbnbs, but only for the nights that you spend on business. You can't just group a couple of extra days on there for pleasure and then call that as part of the deduction. Doesn't work like that. Meals, number three, 50% deductible, but only when the business has business-related meals with clients or partners. Now, number four is going to be the essentials. And what are those? Business necessities, Wi-Fi, equipment rentals, laundry, yes, even dry cleaning as well will qualify if necessary. But check this, if you drive yourself, you can still deduct mileage and actual gas costs. Yes, you can. But how about this? Keep in mind, if you get free nights through points on hotel stays or anything that requires free nights because of some type of bonus, you can't deduct those costs because you didn't actually pay for them. So what's up with the family factor? Putting them on board simply just won't cut it. Now why? Because this is where most people get tripped up, right? You might have heard social media gurus say, put your spouse and kids on the board of directors or payroll, and boom, their travel is deductible, everything works in your benefit. Sounds so brilliant, right? Too brilliant actually to be true. You're right, because it's not. The IRS and the tax courts see this differently. The board of director positions are not employee positions, believe it or not, contrary to popular belief. Now, this means that your family members need to be actual W-2 employees. W-2 employees. Employees is the keyword here, doing real necessary work in the business and on that trip for the business. And it's not just helping out or socializing, right? Bringing leads in, handling the coffee runs, things like that. No, courts have actually ruled against spouses who only acted as hostesses at company events, socialized with clients, and did minor secretarial work without clear business impact. So what does count is real work for family? Good question. And the IRS does allow deductions if the spouse or dependent do a couple of these things. One is a bona fide employee, W-2 employee performing substantial work. Don't trip up on the things that I said earlier. Gave you some examples there. Number two, if they do necessary business activities on the trip, like staffing a trade show booth, actually working, driving, things like that. They have to be meeting clients or managing business contracts. And number three, has work duties that would be deductible by other people even if they weren't there. In fact, large companies with public profiles, think Disney, by the way, one of my clients, has had spouses successfully deduct travel when those spouses helped maintain the company's public image or conducted significant business functions. And that's the key word, significant business functions. So this is important. Here's how to protect your deduction because you want it, right? If you want to safely deduct your family and your travel expenses on a business trip, here's a couple of pointers with this. Make sure your family members are W-2 employees before doing the actual work. You can't hire them on after the work was done. The dates and the times will be proof that you rigged the system. And it's not just on the books, right? Number 2 is going to be document the business purpose of their work clearly and specifically. You need proof on this and documentation. Keep logs, emails, meeting minutes, and they better have the right dates on them and show that they were done beforehand and during, not after the fact and backdated. That's illegal, by the way. Now, plan the trip before you leave is number 3. The IRS doesn't like last-minute business card handouts, right? Because you need to ensure the trip is primarily business with personal time kept secondary and actually charted as such. So remember this, the IRS is literally watching very closely, whether you think they are or not. And these aren't loopholes to exploit. There's really no loopholes that exist, even though that word makes its way around. And there's rules that ultimately need to be respected because if they're not, you're going to get audited. And coming from a personal audit recipient myself, I will tell you that it's the worst thing in the world. What they say goes, and you're going to spend a lot of money trying to fight them, just like I did, over $500,000. And I still had to pay the taxes on it. But it's not about me. It's ultimately about the system. And when you play by the rules, your next business trip can be a strategic way to grow your company and save money without the fear of an audit. So look, if you want a full breakdown and more strategies like this and different ideas of keeping your business profitable and ultimately protected while scaling your team with advisors as well, we have a link in the description below that will take you to a school group, and that is where you will find like-minded entrepreneurs and advisors and videos that came from experts and consultants on certain topics that are relevant to this situation that we talked about here. Use the tax strategies wisely, use the deductions wisely, and make sure that you're planning the trip in advance and you don't get tripped up in an audit. Please don't get tripped up in an audit. Coming from somebody who had an audit. Take care.